good morning, good afternoon, good evening, good day from wherever you're listening to this from. We come your way once again. Kind courtesy just to trade stock brokerage company. All right, guys. So today we have an interesting topic. It's actually a continuation from where we left off earlier with regards to the topic how to make profit on the stock market. Last time we spoke about how to make profit on the stock market through dividends. So today we're going to talk about how to make profit on the stock market through growth of stock, or you can say stock growth, or you can say capital growth. Right. So, guys, stay tuned, and I believe by the time we finish this video, you would understand how to make profit and then how the profit is actually generated with regards to the kind of stock you invest in. All right, so guys, basically, the basic idea of stock growth is that you buy a stock at a lower price and expect the stock to grow in value so that you can sell it and then at a higher price so that the difference now becomes your profit. Right, so that is the basic idea. That is the basic explanation we can give to that. So now we're going to talk about the growth of stock and how the stock increases in value. So let's get one or two definitions so that it will guide us along the way. All right, good. So let's go to Investopedia. Investopedia. And okay, so here we have it. Great. So what does Investopedia say? Investopedia says growth stock is any share in a company that is anticipated to grow at a rate significantly above the average growth for the market. These stocks generally do not pay dividends. All right. So please take note of this. These stocks generally do not pay dividends. This is because the issue of growth stock are usually companies that want to reinvest any earnings that accrue in order to accelerate growth in the short term. So when investors invest in growth stocks, they anticipate that they will earn money through capital gains. Like I said earlier, where they sell at a higher price and then the difference between the amount they bought it and then the amount they are selling it will be their profit. So when they eventually sell their shares in the future, right? Great. So let's make it practical, right? Let's make it practical. So let's say, for example, you buy a stock for $10. You expect that this stock will grow in value, and let's say maybe in the next 4 or 3 months, maybe 4 or 5 months, the price of this stock on the market will now be about, let's say, $50. So the difference here is $40 as your profit. That is per share. So imagine if you have a lot of shares that you want to sell. Right, good. So the basic idea and belief is that over time, the stock value will grow to a value which is higher than the initial price at which the stock was bought. So please take note. So now the next question then comes in is how does the stock increase in value? So actually we're going to analyze one or two stocks and then you see how stocks increase in value. So this time around I would like to go simple. Maybe we can use Tesla. Yeah, so let's use Tesla stocks, right? So you know Tesla sells cars, so they provide their services to people and buyers. People interested in buying cars, so that is what they solely do, right? So we're going to check the stock price and then how it's doing on the market. So we can use that one, investing.com. So here we have it, investing.com. So maybe we can refresh the page, investing.com, and check out Tesla stock. Good. All right. So here we have it. So Tesla on the Nasdaq market is going for 442.68. That is per share. Yeah, so it keeps loading. So it's going for 442, sorry, 442.68 per stock. Right. So imagine if, let's say, you're interested in Tesla stocks. So you can see the chart, right? So this chart has been over a period of time and you can see that it's really doing good. And one basic thing is that if you want to know that a stock is doing well, you realize that the chart of that stock keeps shooting up, and then if it's depreciating, it shoots down. So you can see over a period of time that Tesla stocks have been doing well. That is May 20, 20. Okay, here we have 11th May. So let's say for 5 years, let's check it out for 5 years. Oh, whoa. Okay, so you can see that for 5 years, Tesla stocks have been increasing in value. So they've been shooting up because it has a very good chart. All right, so let's check for 1 year. Or you can also see that 1 year has also been on the growth. So you can see that it's increasing. I mean, it's gaining value because you can see that initially it went for 45.12 dollars, and then it's been able to get to 442.68 dollars as of 3 days ago before the market was closed. So you can see that, which is very, very encouraging and very, very good. Let's check for 6 months. Oh, whoa. So you can also see that 6 months has been also good, and then it's not, I mean, it's not doing bad at all. So basically, this has been able to define what we're talking about so far, where it gains profit. I mean, it gains value over a period of time, and then it shoots up. Right, good. So one thing is that once you're a client and then you see this, you'll be interested, right? You definitely be interested in something like this because it can gain you profit because it's really shooting up. So you realize that a lot of people now therefore come and then buy more Tesla cars. You get my point? So now more revenues are generated, more revenues, and then the more revenues that are generated, the more profits as well. That means that the company becomes more valuable due to more sales and more people continuing to buy. So you can see the revenue here of 25.71 billion, which is very, very, very positive and then encouraging. So as I said, the previous close the amount when it was open, yeah, so you can see the volume on the market now, and then but the most important thing I want us to concentrate on is the revenue that is 25.1 billion, which is very, very positive, right? Good. So let's continue. So with all this in mind, let's also I made another research. Let's say this research says if you invested $1,000 in Tesla in 2010, here is how much you would have, right? So you can read this for me. It says Tesla stock surged a whooping 23% on February 4th, 2020, pushing its market value up more than 3,600%, guys. So this is what we are talking about, growth. So it's about getting the right instrument on the market and then I mean trading in those instruments that will gain you good profit. So you can see for yourself here the percentage it gained in 2010 and its current share price also as well. Get my point. So if you had invested back then with the initial public offerings, price per share was $17, your investment would have really, really paid off. You understand? But there's a disclaimer here. This is just for review purposes and then just to understand how to make profit on the stock market. Not necessarily mean we saying go in for Tesla stocks, no. But then it's just for I mean the discussion purpose and then review purpose so that we understand the idea and then the basic concept of stock growth on the stock market. So as you can see all this information here, which is very, very positive. So you realize that more people I mean, more people still buy, and then Tesla also continues making a lot of vehicles. So you can see here, I got this chart. Number of Tesla vehicles delivered worldwide from fourth quarter, that is for 5 years ago, 2015 to second quarter of 2020. So you can see that it has been on the rise since 2015. They've been producing more cars, more cars. So you can see, you can pass your mouse, I mean, over the bars. So you can see that they've been creating more cars, producing more cars, and then people have been buying, more people are interested. So now the company is gaining more value and then gaining more people to buy their stocks. So you realize that we are humans. So when people realize that the product prices are shooting up, they also decide to buy more of the stocks. Then prices continue to shoot up. So you realize that the company then uh, decides to be inventive. So the good thing, the reason why companies are able to stay on top with regards to stock growth is that company has to be very innovative, because that's the basic idea of stock growth. The company makes money for we the investors, people who invest, by coming up with great ideas and being innovative and then growing on a large scale. So you get it. So as of now, you can see that at this point, Tesla became very innovative, and then they were gaining more and then producing more cars, and people were buying more of Tesla cars. You get my point? Great. So this is the big deal where companies have to stay relevant. They have to be on top. Once you stop being innovative, you stop being creative to get more people on board, then you realize that the stock begins to depreciate, your value begins to depreciate. So they do other other how do you call it, products. So maybe if they say, for example, in 2015 they produced a car with one door, they realize that they need to modify it and then make it more attractive. So maybe in 2016 they'll produce cars with maybe open tops, something like that. Then in 2017 maybe they produce cars, let's say the mirrors will be bulletproof. That will attract a lot of investors, attract a lot of clients. Do you understand that? Good. So the question, as I said, how they stay relevant is they being innovative and then bringing in more ideas for people to buy more of their products, so that they'll remain valuable, so that their price on the stock market, the value on the stock market, will continue to shoot up, and then you as the client that has invested in that company can make good profits for yourself, right? So I also got the Tesla gross profit from 2009 to 2020. So you can see it here. Tesla annual quarterly gross profit history and growth rate from 2009 to 2020. So gross profit can be defined as the profit a company makes after deducting the variable cost directly associated with making and selling its product or providing its services. So you can see, guys, this is very, very impressive. Tesla gross profit for a quarter ending of June 30, 2020 was $1.267 billion. That was what? 37.5% increment year over year. And then you can see here too, Tesla gross profit for the 12 months ending June 30, 2020 was 5.083 billion, and that was also a 14% increment. Also good profit right there. And then Tesla annual gross profit for 2019 was $4.069 billion, also a 0.67% increment, as well as for 2018 as well, they were 4.4042 billion dollars, and it was 81.83 increase. So if you had invested around that time, guys, you would be getting very good profit in your account. And also the Tesla annual gross profit for 2017 was also very impressive, 39% increment. So guys, that is the main idea of stock growth. So when we talk about stock growth, we talk about buying stocks where you believe will shoot up, and then you can make profit. You sell it at a price higher than how much you bought it. And then for a stock to remain relevant, it depends on the company, where they have to be innovative. They have to be produce more products for people, for clients to be interested in their products. And then the more people buy, the more valuable the company becomes. And then the more revenue it generates. And then the more the stock their share on the stock market shoots up and gains value. So the different thing here is that you as the client, you should have your skills, you should be good, you should determine when to buy and then when to sell. That is what determines your being a good trader, as to when to buy and then when to sell, so that you will not make loss and you continue making profit. So guys, this is it for now. The basic idea of making profit on the stock market with regards to growth of stock. So I believe we understand everything. And again, in case you have some questions, you can drop your comments below. So that is it for now. Take care. We'll come your way once again with other interesting topics. So this was brought to you, Kind Ketsi, just to trade stock brokerage company. Bye bye.